today we are talking about the stock market crash. Yes, it might happen this year, and I want to make sure you all are prepared for when it does. Now, this is a new video in a series I'm trying out. I like to call it Graham Stephan Summarized. Basically, Graham Stephan, the biggest finance YouTuber there is. He puts out 15-minute long videos every Monday, Wednesday, and Friday, and I'm here to basically summarize them, give you my opinion from a 24-year-old living life. So today we're going to talk about what different types of stock market drops there are, what you should expect in a bear and bull market, and then what you should actually do when the crash happens to beat the crash and make more money. And just so you know, this video is sponsored by the like button down below. Go hit it. It is free to do and it helps me out. Okay, so a little bit of background. Morgan Stanley, Goldman Sachs, and other analysts have been saying that the rise of 2021, the rise of the stock market is going to come to an end very soon. Morgan Stanley warned of a 15% correction. Goldman Sachs said the S&P 500 would not go up at all in 2021 from here on out. Now, due to the Delta variant, the stock market has been a little shaky this past week, but everyone is on edge. Things aren't looking great and everyone is saying we are due for a market correction. So really, what is a market correction and how does that differ from a market crash? Well, a market correction is when there's a drop in the total stock market at 10% or more. Now, this is actually pretty normal. It happens once about every 16 months. Now, again, a market correction is not really anything to panic about. Definitely don't panic sell, but we'll get back to that later. Okay, so we've got a market correction. We also have the term a bear market. That's when the stock market drops 20% or more. Now, bear markets usually last a year. Again, in 2020, due to COVID, we did see a bear market for a mere 2 months. And then finally, there's a total market collapse, which many think of as a 40% or more decrease. This has actually happened only 4 times in history, the last time being 2009. We were pretty close last year. We were around the 30-35%, but we definitely didn't get there. Okay, so now we know what types of crashes and corrections there are. What are we actually looking for, and why are people saying that there's going to be a stock market crash or correction very soon? So the number one probable reason is this Delta variant of the virus. It's going around the world. Cases are kind of spiking again, but not that bad. There's basically fear that this Delta variant will close down economies across the world like COVID did in 2020. Now, alongside the Delta variant, there's been recent reports that inflation has been over 5%, meaning your dollars are losing value as we speak. Due to this more inflation and the Delta variant and stores possibly closing up again, people are estimating that revenues for the rest of the year might be down. And all of that mixed together says stock prices will go down because earnings are down, there's no businesses open, etc., etc. And believe me, if we have to go back to wearing masks, I'll be pretty mad. There's one more indicator to kind of go with the notion that stock prices will decrease in the near future, and that's bond yields. Basically, everyone and their mother is going up and buying bonds. This tells the market and this tells financial analysts that people want their money in a secure place. They're moving it out of the stock market and into bonds. Okay, so that was the doom and gloom scenario, the why there might be a market crash or correction soon. But why will there not be? There are definitely some reasons why the stock market might keep rising in 2021. And the first is kind of obvious, but the first reason is that everyone is way too worried about this Delta variant. This Delta variant, yes, it is spreading a little faster among the vaccinated population, but it's not spreading as bad as COVID was last year. And look, until I see hard proof that this Delta variant is going to ruin the world again, I'm kind of on the side of we'll see. The next reason why the stock market might keep going up is that young investors like myself are buying into the dips in the stock market. I mean, just look, over this past year, there's been a lot of education out there and everything in the recent events with Wall Street bets, GameStop, and all of that. Young investors are actually getting into the stock market and they know to do it when there's dips. So even if there are slight dips due to maybe this Delta variant or businesses not doing as well, I think it'll still be propped up, meaning the whole market will be propped up by people putting their money in. The other good thing is that supply chains are starting to come back, so we might actually see prices of goods come down. This, in essence, would say inflation is also coming down. To be honest, I think the market is still going to go up throughout 2021, but if it does crash or if there is a correction, here are the 5 things you need to do to protect your money and make more money. First, you need to have an emergency fund. Now, this is just basics, but you need 3 to 6 months worth of your expenses saved up in a high yield savings account. I personally recommend Discover, but you could Google it and just pick the best one. This will save you from the fact that you might have most or all of your money in the stock market, and if it does crash, you'll be losing a large chunk of that invested money. An emergency fund is always safe in that high yield savings account, and it's always there if you actually need it. Second, you need to diversify. If you are not already, if you only have stocks and maybe a little bit in savings, you need to go out and buy real estate if you can. I know that's a little lofty goal, but real estate, stocks, bonds, even crypto, everything and anything will help. And again, don't forget cold hard cash. Cash is always nice in that savings account. And number 3, if the stock market does crash, you need to keep on buying. The best way to invest is something called dollar cost averaging. That's basically buying up little by little over time. This means you never have to try to time the market, and timing the market never works out in the long run anyway. This week you might see a 5% decrease, but then next week you might see a 20% increase. You never know, I never know. And basically everyone never knows when the market is actually going to crash. But if you do see it crashing over 10-20%, those are the times to buy in a little more. And number 4, do not panic sell. If your whole portfolio is down 20%, 30%, don't worry, it will eventually go back up. Unless there's an emergency and you need that money right now, there's no reason for you to take out your money. Every stock market crash has recovered, literally every single one. Go Google it if you don't believe me. And last but not least, and this is one I kind of like, is go make sure your skills for whatever job you do or whatever job you want are up to par. In a time of a stock market crash, usually unemployment goes up, and you want to make sure you're marketable to whatever companies there are out there hiring. Along with that, again, I keep harping on the cash. You always want to have your cash in hand in a savings account in case there is an emergency or in case you do lose your job. So that's it. If there is a crash, you're prepared. If there's not, well, let's just keep making money in the stock market. Thank you for watching. Be sure to like this video, subscribe if you enjoyed, and I'll see you next time.